Hi students, good morning to all. Today we are going to prepare process account part 2 abnormal loss and gain one process. Okay, listen, let's read the question. Question number 28. Product A is obtained after it passes through three distinct processes. 2000 kgs of a material at rupees 5 per kgs were issued to process 1. Direct wages amounted to rupees 900 and production overhead incurred was rupees 500. Normal loss is estimated at 10% of input. The wastages is sold at rupees 5 per kg. The actual output is 1850 kgs. Prepare process 1. Okay. Process 1 account. Okay. What they given in shortly, I explained you clearly. In simple method, first of all, they introduce 2000 kgs. Okay. As a input. Then the material cost 5 rupees per kg. What is the total material cost? So 2000 into 5 rupees you will get 10,000 rupees as material cost. Okay. Then direct wages how much? 900 rupees and production overhead how much? 500 rupees. Okay. Then normal loss is estimated for 10% at where? From input. Okay. Then they given wastage is sold. What is meant by wastage? That means scrap value. Scrap value is sold rupees 3 per kg. Okay. Then actual output they have given, that is 1850 kgs. Okay. What they asked us to prepare? We are going to prepare the process 1 account. Let's prepare. Okay. Let's always started with the T format, that is process 1 account. What is the format to write on debtor side of the process 1 account? There are 4 important items we are going to enter on debtor side. What are they? First item always started with input, introduction of input. Okay, so what is the introduction of input? 2000 kgs. Sometimes they have given the input as a kg form or liter form or unit form. For this sum, they have given the input is kg form. Okay. Okay. What are the items will appear on debtor side as per the format? Input. And what are the cost they they spend during the production? That production cost, all the expenses we are going to enter on debtor side, and abnormal gain and opening stock. Okay, there are 4 items shown on debtor side. Okay, what are the items will appear on creditor side? Normal loss, abnormal loss, output and closing stock. Sometimes output we denote it as finished goods. Okay, if they given process 1, process 2 or process A, process B, process C, in final process output we denoted as finished product, finished stock. Okay, so there are 4 important items appears on debtor side and another 4 items appears on creditor side. What are they? On debtor side, input, all the expenses, that means all this cost they spent during the production, second one, and third one abnormal gain, and fourth one opening stock. If they given the opening stock will always started on debtor side. Okay, these 4 items. What are the another 4 items I have said? That is normal loss, abnormal loss, output. Okay, then we called as closing stock and finished goods. Okay, closing stock, finished goods, abnormal loss, normal loss. Okay, these 4 items we have to prepare the process account. Okay, it will show on process account, debtor and creditor side. Okay, as per the format, what is the input they introduced? 2000 kgs. Okay, first of all, always started with the input. So input 2000 kgs entered. How much rupees they spent for each kgs? 5 rupees. 5 into 2000 you will get 10,000 rupees. That 10,000 rupees we called as what? Material cost. Okay, then they spent direct wages how much rupees? 900 rupees. Then production overhead how much? 500 rupees we entered on debtor side. Then what are the items we are going to find out? Normal loss, abnormal loss or gain output. These and all we are going to find out through working out only we can find out, otherwise we cannot find out. Okay, so first of all we are going to find out normal loss 10% with the input. Okay, so 10% normal loss means 10% means 10 by 100. How much input they given? At 2000 kgs. Okay, so 2000 kgs we multiply with 10%, we will get 200 kgs. What is the 200 kgs denoted as normal loss? Where normal loss will appear? Normal loss will appear on creditor side. Okay, so on creditor side you are going to write by normal loss 200 kgs entered. Okay, then what is the scrap value? How much is scrap value for 200 kgs? So scrap value they have given the question, that is 3 rupees per kg. So normal loss with scrap value. What is the format? Normal loss int rate of scrap value. Okay, so normal loss 200 into rate of scrap value they have given 3 rupees. 200 kgs into 3 rupees you got 600 rupees. So 600 rupees where you are going to enter? You can enter on rupees column on creditor side. So against this where with normal loss. Okay, because you were found that 600 rupees scrap value with normal loss. So you are entered 600 rupees against the normal loss. Okay, entered. Then what we have to do? We are going to find out whether it is an abnormal loss or abnormal gain. How can you find out? We have the format for that. What are they? First we have entered the input. How much input they introduced? 2000 rupees. That 2000 kgs. Okay, with the 2000 kgs input we have to subtract normal loss 10%. How much normal loss 10%? We have 200 kgs. Okay, so we have to subtract 200 from 2000. You will get 1800 rupees. That 1800 rupees we called as what? Normal output. Okay, so we then we find out normal output 1800 kgs. With that we should subtract actual output they have given in the question, that is 1850. Okay, 1850 kgs is called as actual output they given in the question. Listen here carefully. Here only we know whether it is a abnormal loss or abnormal gain. How can you find out whether it's a abnormal loss or abnormal gain? It's very simple. If the actual output is greater than the normal output, then it is called as abnormal gain. Listen here, look at here. Actual output is 1850. Normal output what? 1800. So what is the differences? Actual output is greater than that of the normal output. So it is called as abnormal gain. What is the difference between 1850 and 1800? 50 kgs is the difference between these two items. So that 50 kgs we denoted as abnormal gain. How can you find out? Actual value, actual output is greater than the normal output, that is called as abnormal gain. So we got abnormal gain from this calculation. Okay, so that 50 kgs abnormal gain where you enter, you are going to enter on debtor side. As per the format, abnormal gain will appear on debtor side. So on debtor side you are going to write, you can write to abnormal gain 50 kgs entered. Okay, then what we need to do? We are going to find out what is the value of abnormal gain. Okay, we need to know the value of abnormal gain. So how can we find out? It's very simple. We have the calculation for that. Okay, so from the total cost of the process account subtracted from the result. What is the total cost? We have the total cost 11,700 subtracted with 600 scrap value. How much you get? You got 11,100 rupees. Okay, then we have to subtract 2050, which means what? This is the total input. Okay, subtracted with 200 you got 1850 kgs. Okay, so with this you are going to divide 1000 100 divided by 1850, you get 6 rupees per kg. Okay, now we find out cash cost per kg. Okay, so how much rupees? 6 rupees. So what is the cost per kg? 1 kg 6 rupees. Okay, so that is 6 rupees we are going to multiply it with 50 kgs. You will get value of abnormal gain. What is the value of abnormal gain? How can you find out? We already find out, we know the abnormal gain value is 50 kgs, right? That 50 kgs will multiplied with that cost per kg 6 rupees, you got 300 rupees. That 300 rupees is called as the value of abnormal gain you are going to enter here. Okay, then find out the total. Listen here, I written here, actual output is greater than the normal output, you got abnormal gain. Actual output is lesser than the normal output, it is called as what? It is denoted as abnormal loss. Okay, this is the important format, okay, to find out the abnormal gain and the abnormal loss. Okay, let's find out. So we prepared process 1 account. Okay, then how can you prepare? If they didn't ask in the question, we can easily prepare the abnormal gain account and normal loss account. Okay, it's very simple. Okay, from this question we prepare what is meant by abnormal gain. Okay, what is meant by abnormal gain? That means extra profit. The abnormal gain means what? Extra profit. Okay, listen, now we are going to prepare the abnormal gain account. Okay, so listen here, where is abnormal gain account appears on the process 1 account? In process 1 account, abnormal gain is appear on debtor side. Right? So, in opposite side, you are going to enter up. If you you are going to prepare the abnormal gain account, where it shows in opposite side, you are going to enter 50 kgs 300 rupees. Against this, you are going to write by process 1 account. Why? Because you are taken from the process 1 account the abnormal gain account. Whenever you prepare the abnormal gain account, in opposite side, if you enter the greater side, you are going to enter on greater side the two values 50 kgs 300 kg rupees. Against this, you are going to write process 1 account because you are taken from the process 1 account that abnormal gain. Okay, listen here carefully. That abnormal gain 300 rupees is divided into 2 parts. Okay, so that 50 kgs, how much abnormal gain you got? 50 kgs, right? That 50 kgs is as usual, you are while during the process you got a normal loss. During the process in production sector, during the process as usual you are getting the normal loss. So what about that 50 kgs abnormal gain? We will get through scrap value. Through selling through scrap value, you are getting that 50 kgs. What is the scrap value? They have given the question 3 rupees. How much rupees? Scrap value 3 rupees. What about that 50 kgs of normal loss? 50 into 3 rupees you got 150 rupees. Because I said that 300 rupees abnormal gain is divided into 2 parts. One part 150 rupees. You got through selling, through scrap value while you sold, you received the cash, that 150 rupees. Right? Got it? And another 150 rupees this goes to costing P&L account. Why? Because it's actually getting the real profit. That abnormal gain is a extra profit. Goes to costing as profit and loss account transfer on profit side. Got it? So, that 150 rupees goes to profit and loss account transfer to on profit side, and another 150 rupees you will get through selling with scrap value. You got that amount. You received, okay? You enter here. So, this is the abnormal gains account. Now, we are going to prepare what? Normal loss account. What is meant by normal loss? Normal loss means expected loss. During the production, what are the production if you are running the manufacturing industries, what are the production you do, there happens the expected loss. While molding the soap, while evaporating, while heating the oil, okay, that is called. So normal loss means expected loss. How much normal loss? That means expected loss you get 200 kgs, right? 200 kgs, 600 rupees. So where it appears, normal loss where appears, it appears on process on account on creditor side, right? So if it appears on creditor side of the process account, when you prepare the normal loss account, in opposite direction you are going to enter. You can enter on which side? On debtor side. It appears on creditor side. When you prepare the normal loss account, you are going to enter on. You can enter on debtor side that 200 kgs and 600 rupees. Against this you are going to write to process one account. Why? Because you taken that normal loss from the process on one account. So for that, when you prepare the normal loss account, if you enter on debtor side that two values, against this you are going to write process one account. Okay. Let's take from the normal loss 50 kgs were taken from where? Abnormal gain, right? With that scrap value, listen, always a normal loss, wherever it is abnormal loss, and what abnormal gain, whatever it is, you are calculated with the scrap value. You are selling with the scrap value only. Through scrap value only you sold and get the cash. You can receive the cash. Got it? So for that, from that 200 rupees, normal loss, you are getting abnormal gain, extra profit. Okay, how much? 50 kgs. Okay, from that 50 kgs, you recovered scrap value through selling. What is the scrap value? Through rupees. So 50 kgs into through 3 rupees, you got 150 rupees, right? Then what is the value of after subtracted 200 minus 50? You got 150 kgs. That 150 kgs is real profit. Okay, real profit is how much? 150 kgs. It will get, you can receive cash while selling. That real profit while selling that goods, you received the cash. How much? 150 into 3, you got 450 rupees. This is the real profit. Got it? So these are the sum. After added the total 200, 600, 150 plus 50, 200, 450 plus 150, 600 rupees. Okay, if you have any doubt, without hesitation, please comment, please ask me anytime, anywhere. I am ready to explain. I have ready to give all the clarity regarding the accounts. Okay, thank you. Take care.